Hello, everybody. Brian here from quantlabsnet.com. We are going to go through the code, quality of the source code that's generated from these models for quantitative trading. These involve high-end unknown models that I've highlighted as some examples in my most recent videos in HFT secrets that we're not supposed to know, but some AI will reveal it. So I've used them and I've made prompts to generate C++ files or applications self-contained, similar to what HFT shops do. So we're going to look at the quality of code. Big thanks to the person that recorded this or went through this using three separate sources: Cursor AI, Win3 Coder, and Rue, the VS Code extension. So this is what the structure of this thing looks like. So basically, we have two separate C++ files, same use case. Um, and there's backtest, CPP, same use case for the second one, quant trading, mentioned CPP. And those are same use case, two different models, advanced. And then I have associated files that go with it, plus the README files for each one of those. Plus, I have a description of the strategy as well that's being used. This is only available for my Quant Leap programming members. You can see more of that being pushed out September. The price is going to be fairly uh, because of this. It's just you want to move in this space is something you just don't. It's just not for retail traders. All right, so the first one we can look at is Cursor AI and see what the output for that was. So this is analyze the code and give me a full description what it does and the rank of the code quality. That's the prompt used. Based on the analysis, so it describes what the system does. And again, there's two separate outputs of the same use case. Okay, so basically, generally, what it does it's trying to generate a backtest on this, and also it simulates the engine that implements the institutional grade testing strategies used for three separate distinct instruments. The first one was a TSX, Toronto Stock Exchange. Here's a model that was used. Again, you probably don't know about this unless you're embedded in quant trading in a trading firm. So it uses the vector error correction to identify mispricing between ETF price and its fair value. And that fair value will come from futures or from options. Incorporates macro factors. And this, again, all is generated by AI. So it'd be NAV, WTI crude oil, US Canadian exchange, generates the signals when the residuals deviate greater than 2 standard deviation from the mean. So that's kind of like another way of saying very basic quant stuff where if it sees um, standard deviation from the mean reversion of the trading pattern, then those are extreme positions either for entries or exits. It also includes a mean reversion logic with a Z-score trigger as well. That's kind of common as well. Then we have Nvidia. So this is one I've mentioned before. Volume synchronized probability of informed trading for detecting toxic order flow. Apparently, that's a one that a lot of HFT shops use. They're not going to tell you that. Then we have this gamma exposure analysis for option driven price movement. Again, not talked about. This one, all these are commonly mentioned in AI that I've seen the last few days since I've kind of worked on this. Heston stochastic volatility model for volatility arbitrage. Again, those are the um, using NVIDIA options to find that. You can't get this spot market in the usual stock exchange rates that you would pay or through an ETF. And then, of course, we combine the different signals. We have the VPI and toxic reversal, the gamma squeeze detection, and the volatility uh, arbitrage opportunity. So it's three separate ones here combined to make one model. And this is what typical HFT shops will probably use. More sophisticated, they'll build their own, they'll have their own proprietary ones, but these are the ones that the AI know about. And the last one we did is Euro NZD New Zealand dollar, which is a Forex pair. These are the ones 2 days ago that the AI identifies potentially strong movers. This may no longer happen. It doesn't matter. The point is, it's just the various types of different types of methodologies used here. So we have a volatility targeted carry trade with stress regime detection. Again, did you know about that? That's for Forex trading. So the day trading, the retail trading, the retail Forex brokers won't provide this. Monitor term structure inversion. I believe it's a 3 month versus 1 month applied volatility. Again, because each of these currencies, which is euro, New Zealand dollar, have options and features available because they're part of the G10. Yeah, you'll be able to calculate these and do these kind of calculations quantitatively. And then we also incorporate the VIX and CRB community index for risk on, risk off signals. Again, this is specifically using Forex trading. Then we have dynamic position sizing based on the realized volatility. These four ones are fairly sophisticated. Okay. So here we have the system architecture, again, provided by Cursor AI. First one's quant trading engine, 718 lines, again, 100% generated by AI. We have real-time trading simulation engine, portfolio management with position tracking, risk management with stop loss, take profit, Monte Carlo projection for profit forecasting, and a new plot for visualization. Again, C++. The other one, the backtest, same use case. This is a second AI generated C++ file with the same use case. Here we got historical backtesting framework, CSV data processing and validation. We have realistic market data simulator, performance analysis and reporting, multi-instrument portfolio combination. So again, here you can still use the original step that I had before, where you could use these modeling techniques, and I've kind of shown that in another video, Python using the Streamlit app that's generated. But in that, I highlighted the different types of strategies that could come out of it. It's not the usual retail trading strategies like straddles and butterflies and all that from options trading. It's using quantitative strategies used by these insider firms. This is stuff you won't find anywhere else. You won't find it through any of the big teaching outfits, be it Quant Insti or whatever. You're not going to find these. That's why I'm now pivoting to the Quant Leap membership to provide this kind of quality code. And that's what we're here to provide. We're just going through what is in here. So the key features include, and again, this is for C++ 17 implementation. This is the big point here. Do not, and I keep saying this, do not use external dependencies. Okay. You don't want to do that. What you want to do is to keep self-contained and only use standard dependency libraries. Realistic market simulation, correlated price movements, transaction cost modeling, including slippage and market impact, risk management with position sizing and drawdown protection, comprehensive visualization with the new plot scripts. Now I could put this into a front end with Streamlit with the proper charting. I could also, if I want to go very advanced and bring in and I can still do it with JavaScript and using something like lightning charts. Okay. So we have Monte Carlo analysis for profit projection, auto generation of templates and simulated data sets. So this right here, knowing this, we can add this to the prompts that I use. Say these are the specific things I want, and add these into the prompts when I generate new code projects of all these different types of strategies, specifically with these features that I want. So I can add that as part of the prompting. So here's the quality assessment. This is important to know. This is how good it is. 7.5 out of 10 for what that was provided to Cursor. Here's some good. Algorithmic sophistication, 9 out of 10. That's how good these LLMs are. Implement genuine institutional strategies, the VPIN, VECM, and Heston models. Proper mathematical foundation with stochastic processes, realistic microstructure modeling, and sophisticated signal generation with confidence scoring. Again, all because of prompting and all of what was built out, suggested by the AI because it's that advanced. We get a 9 out of 10. Architecture design, 8 out of 10. So these are really good. So I can make comments about this, but I'm just going to leave it as is so you can see it. Architecture design, clean separation concerns between backtesting and live trading. Wowzer. Well-structured class hierarchy with proper encapsulation, model design allowing easy strategy modification. That's important to future-proof it. In my case, when I'm providing, my goal is to provide something that's runnable. I get it to a point where it's runnable. You can see already the code quality, and that's what I post on the Quant Elite membership for programmers and quants that want to learn this stuff or exploit what's coming out. And I'll be doing a lot of this because I can do this day in, day out, as I've told you. Performance optimization, 8 out of 10. Efficient management with STL containers. That is what a lot of these HFT shops want. They want as few dependencies as possible to be able to use homegrown model implementations that they develop. And it's, again, proprietary, and they'll tweak that and optimize it to make it as low latency as possible. Optimization flags used as part of the compilation process. It has fast execution with less than 1 second for 90 days simulation. I guess it's good. Now, here I can say with some of the shorts that I've talked about, hopefully you've seen these, where Citadel has spent over 1.5 billion on microwave technologies to be able to transmit data between all their microwave network and bring it down the latency to 0.0003 microseconds, which is like pretty well in real time using microwave technology. And that's the amount of money that uh, Citadel has spent to build out those networks between all their data centers and maybe all their uh, research locations, we'll call them. So it has a minimal memory footprint as well, less than 10 meg. Now, again, I'm sure you can go into the AI, tweak, and get these goals down to make it ultra low latency. If you're going to go with a retail broker, I don't see the point of it. If you are going to go direct market on an exchange like the CME, then yeah, it's worth it. And then you build your sophisticated um, code and implementations that put them into direct to market servers. And that right there spent a lot of money. Um, Documentation usability. Again, this is I could make the quality much better, but as is it's generated by AI anyways. So documentation usability is a 7 out of 10. Comprehensive inline comments explaining complex algorithms. That's important to know because there's going to be some people out there. Oh, comments are useless. Believe me, when you look at this code, you'll realize how important it is to be able to reverse engineer this and understand what the particular elements in these models and algorithms are doing. On the other hand, you can still use specific models that will generate fairly low latency, and you can see it in the coding. And you can remove those comments if you want. But the thing is that it becomes more complicated. So trying to reverse engineer it or debug it, it's kind of hard, obviously. Detailed README with the instructions. That's standard professional grade strategy documentation and clear output formats and visualization. So here's some of the weaknesses. Now, this can be because of a variety of reasons. I'm not going to argue. As I said, my goal is to make it as get it into a runnable state. So I'll go through iteration and make sure it's all the bugs, um, building errors are removed and exceptions. Runtime's a different matter. Large files, 700 plus lines, can be split into models. That's true, but I make it self-contained just for ease of use, really. Yeah, you could do that. I could easily do that. But the problem is, what I do in my prompting is I'll say keep it in one self-contained file, one self-contained C++ file to make it easier for the building. Let's face it, to have multiple C++ um, modules or whatnot. It's just pure hell just to get it to a point. People can always take that source code and run it through their own implementation if they want. But also remember that these coding projects are really short used are pretty well disposable because when these are really meant to be run for a month, a week. It depends upon the timeline you want to run it for. So they're very short term. Some duplication between the back test and live engine. We know that, as I said, same use case, so that's pretty evident. Header files and proper include guards. Again, I'm just keeping it raw. No unit testing. I'm good. I mean, what do we be employed here or something? Error handling. Okay, this is another thing I'll put in there. But again, I could put these as features. in my prompting if I really want to do that. Um, but why bother? Because it just bloats the code, which you really don't want. But again, it's optional. Limited exception handling and error recovery, no input validation for CSV data, missing bound checks and some mathematical operations, no graceful degradation of missing data. That's true. Maintainability. It's hard coded and constantly scattered throughout the code. That is true as well. Because let's face it, there's different coding styles. I've basically coding style since the late 80s, C, and it still does it that way. And that's the way I like it. If you're a recent grad or a grad in the last 20, 30 years, you're not going to code like that because you're going to use something called option oriented programming, and it just bloats and complicates the code. More importantly, I'm more about thing. I just had the thought of what am I after? Sequential coding. Some magic numbers without clear documentation, limited configuration options, no logging system for debugging. I could add this as part of my prompting, but I keep it raw. Production readiness, no database integration. Again, same thing, no argument there. Missing real-time data feed. Again, you can add that quite easily to these implementations via AI. Fixed protocol for order execution. True, but again, unless you're spending thousands of dollars per month and willing to with big account, like a couple 100,000 or even a million plus, yeah, you get away with it. So, Interactive Brokers does support fixed protocol, but they're $600 a month. Limited risk management controls. Yeah, but you could probably, as the AI does suggest, you can add in monitoring through Prometheus or Grafana, what's called Grafana, or whatever it's called. You can do that. But again, I'm just keeping these coding projects to the minimum with focus on the core. So technical issues. So this is good that it sees this, that it's identifying this. I give it kudos on this. Mathematical implementation, proper Heston model implementation. So there's a formula right there. Memory management, good, efficient STL usage. So that's good. Areas needing improvement, hard coding constants. I'll never get this. I'll never understand why. What's the problem of hard coding? Should be configured. Oh, I see. Okay, so they want you to go through a file. If you come down to the nitty gritty of, sorry, it's structure, which okay can work with. But again, the idea here is to reduce as many cycles on CPUs as possible. I mean, if you really want to split hairs over this on format, should be configurable parameters. Okay, overall assessment. High quality research grade quantitative trading system that demonstrates strong mathematical foundations with proper implementation of institutional strategies. And again, here, institutional strategies that you probably not going to learn anywhere else. Good performance with efficient C++ coding, professional documentation, and comprehensive features as well. Realistic market simulation capabilities. Great. Needs production hardening. I agree with this. But again, this is just the raw, well, I won't say simple, but raw, simplistic as possible, primitive as possible. So they want you to modularize header. Oh, God. You could do that, but again, these projects are very short term, and because it's AI generating, again, these can be disposable over time after your trading opportunities have done, and just go back in and repeat the process and generate more C++ files or more Python, whatever you want. Configuration management system, comprehensive error handling, unit testing framework, real-time data integration capabilities. So this is a great analysis. This code represents excellent proof of concept, which it is, and even the AI will suggest to you that this is not to be used for production. So knowing all these, you can add these capabilities and new features as you want in your original uh, prompting to get to that. But just understand that it's more iteration, more improvement, more complexities in the code. I don't deny that. So this algorithm sophisticated is impressive, but it would require significant refactoring for institutional deployment. Yes, and even the AI suggests that, and I agree with that. Final score, 7.5 high quality research code with room for production improvements. Can't argue that. And again, that's cursor. That's a very good assessment. Next one. Let's see what Quant 3 coder came up with. Okay, so comprehensive analysis of quantitative trading engine, two main C++ programs, backtesting, quant trading, implement three financial instruments, TSX, Nvidia, and Euro LZD. So I don't think we need to go through this modeling, but this is going to be, again, because it's a different AI, it's going to use different models uh, to hopefully achieve the same goal. But the problem is the results on your performance is going to be different from either or of these C++ programs or applications, whatever you call. So this one's using for the TSX. Now this one is very uh, is very low level uh, coding. Had very little comments on the actual models that were developed. So this one's designed for um, more designed for closer to production. But this one's using something totally different. So this is different, using a different quant modeling uh, modeling technique. So it implements a residual mispricing strategy using rolling OLS regression to identify deviations from fair value on same sources as the other one. And they're two separate LLM models. Nav, w, WTI, and US CAD. So these are the big things out of Canada, oil, WTI, and US CAD. The Forex trade. Trades are triggered when the Z score of residual, similar as before, thresholds -2 for long, plus for short, with an exit at Z score of negative 0.5. So for my prompting, what I've done is I've specifically asked for entries and exits and what will trigger that. And these are the trigger points right here, the exact parameters that you need to have to trigger your entry and exit. Not many, but I could pretty well safely say not a lot of quant anything will provide that. Even if you're using MATLAB or R, they will not provide the trigger points. But here I've asked for it and I got it. And this is probably the top secret parameter values that HFT shops will use to trigger these points on these type of quant models. Nvidia. So it's now using the same one as before, VPIN, okay, to detect order flow toxicity. Again, same. Reversal trades with a VPIN when it's greater than zero point 0.8, exits when the VPIN is negative 0.5 with an optional negative gamma breakout override. Interesting, eh? Um, so I'm learning about the technology here. This is called momentum ignition. Again, that's terminology that the HFT shops use. Euro U NZD. Okay, so this again, it's a Forex pair. Again, you won't find this in retail Forex at all. Implements a volatility target carry stress trade that enters when a term structure is inverted. The IV, implied volatility, 3 months minus the 1 month is less than zero. And V, now this is where it gets complicated because like you have to look at the code what these are, is greater than 25 and CRB is below 100-day moving average with a position sizing inversely proportional to realized volatility. Okay, so I'm not going to go into details there because I really don't know. I haven't looked into it, but you can tell that it's once again it's giving you the exact parameters right here. These right here on the entry and exit. So there's again you can see here it's using a 100-day moving average, but the CRB's I can't remember what that is, but I have to look at the code. But nonetheless, doesn't matter. We're looking at the quality code here. So these are the self key features, which I stressed in my prompting. Self-contained operation, similar to what HFT shops use, only in C++ standard library with no external dependencies. That's to remove as much bloat as possible with third-party dependencies. Automatic data simulation if the input CSV are missing generates a realistic simulated data set for all three instruments. And again, because I don't have at this point real market data, I could easily get that and subscribe to the options chain data subscription for interactive brokers to feed that data file. And that, as I said, that can go out all the way out a year, year and a half if I want to get precise, accurate modeling, and the trigger points on the entry and exit as well. So we got automated data simulation. If the input CVs are missing, it generates realistic simulated data sets for all three instruments. And again, I ask for that as close as I can, but when you provide the real data, be it futures and options, specifically in the option chain data, and the quant shops will say order flow, as far down as it can. And the optimal is usually 3 months, but when you see a year, it's amazing how a lot of the trading firms that do this will project how far down, as an example, Bitcoin and so on and so forth. So then here we have template generation. So it will create CSV templates, proper column headers, and sample data. That's pretty good. And again, that's 100% generated by the AI. Comprehensive generate P&L CSV for each instrument combined book plus ready um, to run new plot strips for visualization as well. Robust error handling, file existence checks, and graceful degradation when certain data columns are missing. Okay, so that's part of the one LLM that I'm using to do that. That's part of the feature set that the LLM is using. Um, so here with the data flow, we've got simulate realistic data, run backtest, present, and then generate P&L CSV, generate the new plot scripts, and right in the program, and visualize the results. So that's, I believe that's the backtesting one. This one, Quant Trading Engine Institutional Grade Trading System, not quite. That's how it was built. And again, it depends upon the LLM that's generating the code. And none of these were, people might think DeepSeek might have been one of the LLMs. They're not. Good at the trading insights, and that's the latest one that just came out, 3.1. These ones that generate the code are two different LLMs. And I'm not going to say. If you were part of my Quant Lead membership, I might tell you. Okay, that's how you maintain your trading edge. Quant Trading Engine implements a more sophisticated trading system with advanced quant trading models. So again, this is a different LLM that generates the same use case, same prompt versus the other one. So this is what it's generating. Heston stochastic volatility model simulates asset prices with stochastic volatility, capturing the volatility clustering observed in the financial market. VECM for TSX implemented a more sophisticated co-integration base approach than the simple OLS regression. Gamma grid analysis. This is getting sophisticated here. Models option market behavior and gamma exposure across different strike prices. This is so critical. This is why I have to stress, if you are just trading the spot market, if you're trading not in just in the futures market, you are going to lose money without a doubt. It's been proven now because the HFT shops, which I've shown earlier, prior in the most two recent videos, there are going to be HFT shops looking for your positions, your trading, and that will greatly impact your open positions. You would be a fool to still trade like that. This is what the AI is telling me, and we have to find ways to counteract that. So we also include the VPIN calculator, measure the order flow toxicity. Again, that's option chain data that reveals it to identify informed trading. Very important right there, because that's what we're looking for to protect yourself. Portfolio management. Implement proper trading, position sizing, risk management, and P&L tracking. And again, you can build out front ends to this, be it in JavaScript using Lightning Chart, or you could do it in Streamlit Python. The world is, as I like to say, the world is your oyster here. Multi-factor signal generation. This is amazing. Combines statistical arbitrage, volatility modeling, and market microstructure signals. Just to give you an example, each scan can take, from what I saw, probably half an hour to 45 minutes. That's how sophisticated these things are. Okay, you cannot do this on a homegrown rig with your own machine learning. There's no way. And even if you could, there'll be a new version that will blow it out, and you can't run it anymore because it's the next version is more sophisticated. You can't do that. The only way you can do this is through cloud solutions or use an application directly on one of the popular LLMs. Risk management implements position sizing on volatility, stop loss, and take profit level. This is another one. This is really important. Monte Carlo generates profit projection with confidence intervals. We're also now living in a day where the competition is so fierce among the cloud providers, be it Amazon, Google, Microsoft, Azure, that the costs are coming down. So you can run these Monte Carlo simulations, provide the code, and ask the AI on top of that to provide the deployment and build processes set up so you can run on any of these containers to do Monte Carlo simulation. And the other thing is you don't have to worry about the hardware yourself. And as I said earlier, that hardware is going to be outdated within the way AI is moving. It's moving at a too fast of a pace. Comprehensive visualization, create panel charts, equity curve, daily P&L, cumulative return, and drawdown analysis. You can do that anytime. Again, you have to remember that this is important to know that these are disposable projects after short term of use. Production ready, Docker deployment, instructions and performance metrics. It's pretty powerful. Trading logic. This is on the graph TD, market data versus alpha generation. So here we have the TSX, VECM residual, individual with a VPIN plus a gamma, Euro NZD, the carry trade, and the volatility. Then we also carry out the confidence scoring. Then we also have to calculate a position sizing, execute trade, update portfolio, and generate the port. So here we have the code quality assessment. So here it's saying about the documentation. Again, both code files support documentation, README text, strategy text, exceptionally well documented, explaining the rationale behind each strategy and implementation. And again, this is how I generate the code. And again, this is again generated by the AI. And then I take that, feed it as part of the next prompt to generate the code. I've shown this before in a various set of webinars. I got another one on Thursday night, but you have to watch those. And again, I'm not going to answer questions like this anymore publicly. You have to be part of my quant elite programming to make my worthwhile to help you on this, because time is for me is valuable, and I also need to ensure that you're the kind of person that's highly productive and highly motivated to implement this stuff. I can tell who's not going to do anything. So I have a screening process I might have to make sure they're a proper fit for this type of membership. Robust design. Code demonstrates thoughtful architecture with clean separation of concerns between data handling and strategy implementation and output generation. Okay, again, let's just see. This is again Quen 3 coder analysis. Self-contained nature, backtest, CPP implementation is truly dependence-free, using only C++ standard library, and makes it highly portable and easy to deploy. That's a key there with C++, Python, Java, all the rest of them, is that you can take this code, run it in Linux, you can run it in Windows, and you can also run it in Mac as well. And it's portable. That's the whole point. Write once, deploy anywhere. But the other thing is, you also have to remember what's key is once you start to use the more recent versions of C++, like 20 or 23, you're going to run into the compiler problems because certain compilers and certain operating systems are not going to be updated for those particular C++ implementation versions. So again, it says about the resilience of this. Automatic template generation and data simulation features ensure that the program can run even without input, greatly improving usability. Again, that's with the simulated market data. Realistic modeling. Simulation functions create plausible market data with appropriate statistical properties with mean reversion, volatility clustering, and regime switching. These are all again, part of the terminology that is basis quant creating and model building. So if you're going to go into quant research and eventually maybe go into what they call now systematic portfolio manager, the top paying in any trading firm outside of the management, where you get paid in the millions of dollars and you're predictable and really good at it, this is where you learn it. Again, with a professional output, new plot strips generate publication quality charts with proper formatting, legends, and multi-layered layouts. Now, to me, they're not that great, but thanks to this AI thinking. It's great. But if you really want to go top notch, you can use other methods. As I said, you could use lightning charts with JavaScript. You could use the Streamlit as well, using some of their uh, charting as well. But again, that's outside of this specific C++ um, program, and that will make the program run fast. And you could just have generate files or some kind of database that the other tools will access, so they're not impacting each other in terms of performance. Risk awareness implementation includes transaction cost modeling and position size and considerations. Again, improvement. Code duplication, we know this. Two files, we already know that. Error handling, well, basic checks are present, more comprehensive data handling for data quality issues, blah, blah. I get that. No unit tests are included, would be valuable for verifying correctness of the statistical calculation. I get that. You can add that in if you want. Again, all the AI mentions, this is not for production. This is just for educational research purposes only. We get that. So those are steps that would need to be provided. Configuration management, fitting parameters are hard-coded rather than being configurable through a settings file. Again, you can do that, but for performance, you don't want to use setting files. If you really, really care about splitting hairs on HFT or bare metal performance, you're not going to do this. Okay, you might not even do hard coding. Let's say is memory management, use of raw pointers and manual memory management. Some areas could be improved with modern C++ smart pointers. In terms of performance, I'm not sure if raw pointers are faster than smart pointers. I can't say. I don't know because I don't really see production grade, institutional production grade quality code to see what they're doing. I'll never see it. That's secretive. Already efficient performance optimization. Already efficient. So their optimization can be achieved through algorithmic improvements and parallelization. Again, you can add that in the prompting. Quality code is exceptional. So we got here at the 8.5 out of 10. Thank you very much. High for quantitative finance implementation, particularly considering it's self-contained and dependency free. This is important to know. If you're one of these garage quants, as one of the leading top quant researcher would refer you as, to make that kind of statement and be able to be a high quality coder, unless you're some kind of genius, you probably achieve this type of score and comment from a coding analysis. But to get 8.5, that's pretty good at where we're at because of these advanced AI LLMs. Design decisions reflect deep understanding of both financial markets and software engineering principles. Okay, so here's the rating breakdown. Correctness, 9 out of 10. That's awesome. Statistical models are implemented correctly with appropriate numerical methods. Maintainability, clear structure, but some duplicate between files. We know that already. Usability, this is important. Excellent self-sufficiency with automatic data generation. Performance, efficient algos with memory management footprint, documents, outstanding documents at both coding and conceptual events. So how I provide these projects on my membership, Quantly programming membership, it says it right there. 10 out of 10. Good. Robustness, good handling, but could be more comprehensive. So code base represents a sophisticated quantitative trading system that bridges the gap between academic research and production trading systems. This is the big gap that's been there for years before AI came along. Um, you could, it's no different than with MATLAB or R. Great for academia, but to take that code and those training ideas and turn them into production, there's always a big, big gap in MATLAB. Try to do it. I don't know if successfully, but it's probably advanced quite a bit now. But to hand code it or have the AI code it in a totally separate process, to have this statement, that's how advanced the AI is becoming. And to have it say it's good, near perfect, that's even says something above that, above and beyond. So the backtest CPP implementation is particularly impressive as a self-contained dependency free backtester that can generate realistic results without input data. Okay. Tries to implement and reflect institutional grade quantitative approaches, including statistical arbitrage, market microstructure analysis, and volatility modeling. Again, these are techniques handpicked by the different AI models, LM models, and a lot of them using the same ones, which kind of surprises me as well. The code demonstrates a deep understanding of both financial markets and software engineering best practices. Boom. Production use. The two implementations could be unified into a single code base, agreed, and configurable module. And additional features like proper unit testing and configuration files and more. Comprehensive error handling would further enhance his robustness. I agree there, but that's different. Okay, so we're going to look at some more visual stuff using RU, which is again that this is pretty good actually. So this is a VS Code extension, RU. Code base. It's two main, blah, 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 quantitative trading. We already know those. Advanced statistical models, market microstructure analysis and risk management, generating trading signals and backtesting strategies. Wow. Okay, so this is what it's doing for TSX. Residual micro mispricing strategy using OLS regression, identify deviation from fair value with NAV, all that. Trigger with Z-score residual thresholds. Again, we know about the trigger points. The Nvidia model, VPIN, next short order flow toxicity, enters reversal trades when VPIN is greater than this and exits when it's less than that, with optional negative gamma breakout override. Implements volatility target stress trade that enters when term structure is inverted. We've gone over this. These are the trigger points right here for the implied volatility. VIX, CRBs below 100 moving average, exercising inversely proportional to realized volatility. This is, I'm impressed with how this is the output of this. Self-contained operation, C++ standard library with no external dependencies. And I would always recommend doing that. Don't use complicated third-party, commercial or not, open source or not, dependencies. It just really complicates the building process and just adds more bloat. Let the AI generate the modeling for you. And at some point, you want to reverse engineer those models and really understand it from a quantitative math perspective. Automatic data simulation. CSV and missing generates realistic simulated data sets for all three instruments. Template generation. CSV templates with proper column and sample data. Comprehensive output, similar as what it CSV's instrument to the new plot, robust handling, reduces file, existent checks, and graceful degradation. Certain data columns are missing. Okay. So here's the logic visually of the input CSV files, generates the templates, simulates realistic data, runs a backtest, and that's what it's currently set at. Okay. So let me just make sure I get to the second one here. The second one here. Okay. Let's see here. Okay. So this is now the quant trading engine, advanced quantitative models. And again, this is generated from a different LM using the same prompt. This one's now using Heston, stochastic volatility model. Again, just to reinforce this, simulates asset prices with stochastic volatility, capturing the volatility clustering observed in financial markets. The VECM, it's not specific for the TSX, more sophisticated co-integration based approach than a simple OLS aggression. So it's also, as I said earlier, with the other types of analysis, gamma grid analysis model, options, market making behavior. The other ones didn't mention that. Models, options, market making behavior. That's HFT talk right there. Gamma exposure across different strike prices. Again, I can't reinforce this. If you want to get really good at this, you've got to have fairly strong understanding, option pricing, strike pricing, and the different Greek analysis, which is part of this gamma exposure. Okay. Yeah, I got a course on that. It's fairly lengthy. That's part of going to be, well, you can take it as a standalone right now, but that will be part of the membership. VPI calculator. Measures the order flow toxicity to identify and inform trading. It comes back to the option chain data I talked about. Portfolio management, proper position sizing, risk management, and P&L tracking. Key features: signal generation combines statistical arbitrage, volatility modeling, and micro structure signaling. Risk management implements position sizing based on volatility, stop loss, and take profit levels. Monte Carlo simulation generates a profit projection with confidence interval. Comprehensive visualization, multi-panel charts using equity curve. That's not true, multi-panel. Equity curve, P&L, cumulative return, and drawdown analysis. Production ready. Docker deployment instructions and performance benchmarks. So that's kind of makes it available on the Docker on whatever cloud provider you want. So this is the last one. So this is the rating now. Excellent documentation, both code, supporting document README, strategy texts are exceptionally well documented, explaining rationale behind each strategy. Again, AI generated that. If you haven't figured out right now, AI can do pretty well everything end to end. So if you're running a trading desk or with people, if you're running a firm with a team of coders, AI replaces all that. Okay. And that's why you're seeing massive layoffs from the likes of HSBC, soon to be Goldman Sachs, and blah, 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 blah. Robust design. Code demonstrates through architecture clear separation of concerns between data handling strategy and output. Okay. Self-contained nature. Again, these implementations truly dependent. Use only C++ standard library, which is what you want to strive for. Make it highly portable and easy to deploy. Resilience, automatic template generation, data simulation, ensure program run without data, greatly improving usability. Realistic modeling creates plausible market data with appropriate statistical properties, mean reversion, volatility, clustering, regime switching. Professional output because this is new plot. Publication quality charts with proper formatting, legend, and multi-panel lists. Again, that's not true, but you can radically improve it with JavaScript, whatever, Python, whatever. Both implementation, transaction cost modeling, and position sizing considerations. So, okay, we know this. Code duplication, we know that. Error handling, basic file experience present and comprehensive. Missing data, yeah, we know that. Testing, no unit tests, we got that too. We can add that as part of the uh, AI prompting, but um, I might have to do that down the road, but it just complicates things more and bloats it more, which I don't want to go through really. Configuration management, hard-coded rather than configuration through a setting file. Can't argue that. Memory management, use of raw pointers and virtual memory. So I can next time ask for C++ smart pointers. That's something I should consider. Performance optimization, uh, further up and achieved through algorithmic improvements and parallelization. Repeats the same thing, what we already know. Code quality is exceptional for quantitative finance implementation, particularly considering self-contained, independence-free, which is what you want. Design, reflect, understand both financial, market, and software engineering purposes. Correctness, 9 out of 10. Statistical models implemented correctly and appropriate numerical methods. Maintainability, 8 out of 10. Clear structure, but some duplication between files. Usability, excellent self-sufficient with automatic data generation. Performance, efficient algo with low memory footprint. Documentation, again, not me saying this. Outstanding documentation at both code and conceptual level. Robustness, code error handling, but could be more comprehensive. Again, we know all that. The code base bridges between, again, it's repeat the same thing. I think it's using the same source, the root, Quant, the other one. There's just seems to be using the same LLM to generate the same language here. Uh, input is particularly impressive as self-contained, dependency-free backtester that can generate realistic results without input data. So what it's saying here is that this particular implementation backtest is better than the other one generated right here. That's what this ruse is telling me. Strategies implemented institutional grade quantitative approaches, including statistical arbitrage, market microstructure analysis, and volatility modeling. So it demonstrates a deep understanding of both financial markets and software engineering practices, Production use to implement could be unified into a single code base. We know that with configurable modules and additional features like proper unit testing configuration files. We got that too. Comprehensive everything would further enhance its robustness. There you go. All good. So again, if you want to know more, just go to quantlabsnet.com. Get on my email list. Part of this as we pursue this. You want to get on our email list. We are now doing some online webinars on these topics. You want to get into our Learn tab or here and get yourself a free ebook on C++ HFT infrastructure. And again, we've got our events and all that fun stuff. If you join, you'll know about it. Thanks for watching.